Hey guys, what's up? Brian here. I know I haven't been recording or uploading any videos for the past, year probably at this point. I think my last upload was like somewhere in May or even April of last year. I can't really remember. But it's because I've just been too busy with work. But now that I've officially stepped down from that position, I decided to want to give content creation another go because it's something that I like, and some people also did uh, reach out to me and say that they like my content. So that made me very happy that people appreciate some of my work. So I just thought, you know what? Let's just kickstart a potential return back to content creation via a very raw video. This video is super raw to the point where I'm not even on a desk using a mouse. I am literally sitting on my bed with my MacBook currently because my cat is occupying my desk. So anyway, so this video is mainly going to be tailored for beginners or people that have put time into trading, say 6 months, a year, but they might still be a bit lost in terms of how they want to approach trading, right? Maybe they have strategy hopped a few times, which is also fine. There's nothing wrong with that. But this video, I hope, can clear some of your questions up. Okay, so let's get started. So I assume that most of you watching this video are retail traders like myself. And the thing about trading is that there's so many different ways to trade to the point where none of them are inherently wrong or correct. Okay, it all kind of boils down to the trader's development, and that's pretty much the key to success, right? So, uh, this video won't exactly cover just like one strategy, but I hope at the end it does open your mind up into approaching technical analysis in a sense. So, what is technical analysis anyway? Well, technical analysis for me is I'm reading historical data in the past to predict and react in the current. That is what technical analysis is for me. Okay, say here we have a resistance. I'll just use support and resistance because it's pretty much the most common strategy out there. I assume like everything else is pretty much derived from support and resistance in some form of way, and we're all pretty much just trading some form of support and resistance. All right, so support is essentially just an area that price has bounced off of, like somewhere here. This is a support. You could even drag it down. There isn't exactly one correct way to kind of draw it. It's just, it all depends up to you, which sounds kind of sucky and subjective, but it is true. Okay. So support could be here, and resistance is just somewhere that price has failed to push past and is finding like a wall or some obstruction and going higher, right? That's pretty much just what support and resistance is. Now, this is a very simple concept, and a lot of people these days, or not these days, but for the past few years, has been shitting on this specific concept because it's too simple, right? It's very easy to understand, it's very easy to implement, but just because it's simple doesn't mean it's easy, and just because it's simple doesn't mean you can make money off of it, right? Because that's the whole point of you being in trading is to make money. So with that in mind, let's just say this is a support, this is a resistance, and you want to kind of buy at support in a general idea and sell at resistance. So if price, comes up, I hope this is the right color. Yep, it is. Comes up, comes down, then you want to sell it at this area because you're hoping this move to happen. Why? Well, answer is very simple. It's because price has failed to push past that area in the past. So now when we go back, we expect history to maybe not repeat itself exactly, but to at least rhyme, right? So it could do that. Um, so that's the general idea behind technical analysis. You're spotting areas of reference on a candlestick chart, and then you are looking to predict and react to that area when it does get reached. So we are all just looking at reference points within this type of data, which is the candlestick chart, which showcases to you price movement against time. Okay, so here we have a bearish candle, for example, the open, high, low, close. This is what this chart is showing you in its raw format, and we are just putting things on the chart to make sense of it, right? It doesn't mean that price reversed off of a support because that support is holding price. You never really know why something happened, to be completely honest with you. Every strategy out there that is based on technical analysis, that is in reach to retailers at least, is pretty much not exactly the cause, but more so the effect, right? The reason why price came down here is because it came to support. That's it, right? Price found some support down here. Why exactly? I don't know, but it just did. So that's pretty much what trading is for most people. And it's not wrong, right? In trading or in the finance field, there's a lot of different participants. Most of them are robots these days. Like 70% of trading volume is completely automated by hedge funds, by proprietary firms. Not many of that volume nowadays is by retailers, right? So you won't really know why something happened, right? Not even the firms know why something happened unless they were the specific cause of, say, pump and dump of a stock, which is illegal, or crypto, which is not regulated. But you won't really know why as a retailer, is what I'm trying to get at. So you don't need to find out the why to make money. You just have to find out the when and then the what, right? So what means, are you buying or selling? And which asset are you buying or selling? And then when are you going to buy and sell it? It's that simple. So so let's say you trade support, you trade support and resistance, right? You trade a very simple concept, which is fine, but you have to adapt that concept to current market conditions by you practicing and learning. Okay, what I mean by that is, okay, let's say, let's just bar replay this. Okay, let's just go to a random bar. Okay, this is a very bad price action, but okay, let's say price is currently here and we're dipping crazy hard on the daily. Okay, this is last 2022. So right now you're clearly seeing that based on just using your eyes, we are making lower lows and lower highs, right? Okay, forgive my horrible drawing. I'm not a big fan of the trackpad for charting. Give me that. Okay, of charting. Dude, why is it not? Okay. Anyway, so we're making lower lows and lower highs, right? We're clearly in some way at this price point within a downtrend. So typically, when the market's in a downtrend, you're taught to follow the trend and to short. And I agree with that advice for beginners, right? I'm not saying you can't buy down here, but logically, would it make sense for you to buy when the price is just continuously tanking down, and it's been tanking down for like 100 days now at this point? Would it make sense for you to try to catch the bottom and go against that trend? As a beginner, probably not. When you're more advanced, it's still not exactly wrong or right, but you need to have your strategy take into account for the fact that it's in a heavy bearish downtrend. Okay, so let's just assume we are a complete beginner. I want to ride with the trend. Okay, cool. So now that I know what my bias kind of is, I want to find my reference points. And your reference points are your areas of interest, your points of interest, right? If you trade indicators, that could be something like an EMA, for example. It could be an EMA. It could be something else. Or if you just trade support resistance, then you want to trade something maybe like a break and a retest, right? We have this support down here. support because price has been bouncing higher to this level, which ultimately failed, and now price is close through it. So now I want to expect that area to give me some form of a confirmation to go short from, which is pretty much just a typical break and retest trade. So let me play out, see if we actually get that, because I'm not sure. Well, we're really tanking right here. You could at this point scroll back in time and take a look at, oh, what areas do we have? Well, we have this resistance broken through it, price came back, tapped it a bit, so that is some area of potential support, which didn't really hold anyway. So the next one for me would probably be like down here if I were to use support resistance. Right, let me just zoom in. Yeah, somewhere down here we have another support. So we are crazy bearish, but we are potentially coming into areas of support. So now that begs you the question, do you want to long into such heavy bearish momentum? Now, if you said yes or no, that's completely valid. It's up to you. But look at how bearish we've been. You could say that, oh, it's probably likely going to continue what it's doing, or because it's so overextended, we've been bearish for so many days, and we've been so bearish, we need to have a correction. And most times the correction happens after we tap and hold an area of interest. So that could be a support in this example. All right. So let's say I want to take a potential long at this support. Okay, let's see if price comes back down to it. Okay, we've tapped into that general area of support, and we're showing some signs of slowing down. We're not closing beneath it with a body like we did at these levels. So we have a pin bar at this point, which is categorized by small body, long wick, rejecting this area. So now you could just technically, in theory, just do a buy and then like a stop loss beneath that area. This is generally what you're taught, and it's not wrong. All right, it's completely not wrong. And then you could have a target at maybe 1 or 2, right? So that gives you a slight edge in terms of the risk reward. Once again, people, they do make money trading 1-to-1s, but this is completely up to them. So let's say I take a buy right here and then price goes up. Okay, but before I play the next button, I also want to tell you that you could look for confirmations on like a low time frame, but I'll get back into that in a bit. So let's say I bought here at this close right here. Okay, and then I immediately got stopped out. So this is the logical way of approaching this kind of trading, right? When you're seeing such heavy momentum, you kind of, as a beginner, not want to exactly try to catch the bottom. And I'm not saying it's not possible. It is definitely possible for some people. But as a beginner, you kind of want to have these logical ways of thinking that, oh, price is going down. It's likely to continue for a bit. And I don't want to be that guy that's just trying to block a crazy bearish train. Okay, so then you will either look left, or you could even not look left. You could literally just tell yourself, okay, well, I want to wait for some support to form by seeing a bullish candle. Okay, that could also be one of your ways. Or you could even say, okay, I'm going to drop down to the low time frames to see if price respects this area. So this is the daily level. We came back down, and once we tap a daily support, for example, normally price will do two things. It will either go up, respect it, or it will go down and break it. Okay, sometimes price could come down range for a bit. We're forming a range, and you could say, you know what, I'm gonna enter on the breakout right here at the top, since it's a daily support. I want it to range for a bit before breaking out. That's completely up to you, right? And that's the thing, you have to monitor your areas of interest, study them, wait for price action to come into the area, show you some kind of pattern, and then your confirmation to go long or go short, right? So let's just say it came into this area, it ranged for a bit. This is probably that range high, range low. It never really broke out. So if you were trading in this manner, you wouldn't have ever entered anyway, because there was no confirmation, right? Of course, sometimes price just comes into this level and then it just bounces higher without showing you any range. Well, that's something that you also have to look into to get data from, to journal, to note down, to see which type of conditions do you want to like participate in. Are you looking to long when we're so bearish on the daily? Do you want to just pending with a stop loss beneath that area? Or do you want to wait for confirmations on, say, the 1 hour time frame? Right? That's completely up to you. And there's no wrong or right, because the only way that you can say you're right is if you are able to consistently make money over time. That's the only truth in the markets. Okay? So let's say I removed everything. Let's say I want to wait for support to form. Okay, now we have a really strong support forming. We have a really strong bullish candle after this large bearish move. So now you always know that the market doesn't really move parabolic, and by parabolic I mean it doesn't move higher or lower in just like one straight line. It has to do some kind of pullback. So now you are saying that, okay, well, I'm seeing the markets being a crazy downtrend, and we have been super bearish for the past few days. Really, let's just measure how much this is. This is like a 5% drop in just a few days, maybe even a week, right? Like it's like minus like 600 points, all right? So maybe you could say, okay, well, it might reverse here for a bit. I'm gonna take my buy stop, put it above the candle's high, stop loss just at the lows, target like a 1 to 2, or maybe just a 1 to 1. Let's just put it at a 1 to 1 for convenience sake. And then let's see if the buy plays out to kind of come back into this range for a pullback trade, and then we could potentially look to continue short from here, right? That might be a plan that you're willing to take. Well, let's just play it out. So we are triggered here, and then boom, immediately we're stopped out. Okay, so there's a bunch of different ways to trade, and support and resistance is just one of them, and they're not inherently wrong, right? Because say you were waiting for a support to form, you found support, you put a buy stop there, so a stop loss beneath that level. Some people might have been looking to trade against you, right? Some people that trade ICT concepts say, oh, this is a bearish fair value gap, so you were shorting into, you were longing into a bearish fair value gap, right? Taking out this swing low as your target, right? Like price is doing like a big range, pull back into a gap, taking out the external range liquidity down here, which is the external low, and yada yada, right? What I'm trying to say is everything kind of, I mean, it's the same chart, right? It's just different ways of methods to identify different types of points of interest to get a bias and then enter a trade, when that bias aligns, right? If you trade ICT concepts, you might also know that this is the last explosive range, and typically what happens if price normally pulls back into, say, the midway of that range to continue lower. In this case, that never happened anyway, right? So it just depends on what you want to do with your strategy, because they all kind of work sometimes. The key point as a trader is to understand that just because something doesn't work all the time doesn't mean it won't make you money. But it is up to you to refine yourself to understand what kind of setups do you want to take, right? Say you trade breaks and retests, right? Yeah, that's your first level. This could have been your second level, and then you could be expecting a price to now do this. But then where's your stop loss going to be at? Where are you going to put your stop loss at when you're trading this level? Because price could just come up, retest this area of resistance, and then push back lower. So where is your stop loss going to be at? So these are the things that you have to ask yourself when you're placing a trade, and why your system is telling you to do that in the first place, right? Have you actually deep dived into your systems and your strategies? What's your win rate for your systems and your strategies, not just in backtesting but also when you are live testing the strategy out? Is there any inclinations for me. Like, do I only want to trade praise and retest trades? Do I want to just set a pending order? Do I want to market execute? Do I want to go on to 1 hour look for confirmations for me to short at? Like, let me just wait for price to pull back into that level, uh, and it never does, and it just keeps going lower and lower, and then we almost kind of pull back into it, but not really. Like what? Like, how do you define your areas of reference for trades? And when they trade back into it, what kind of pattern or formation do you want to look at, right? Like, do you want to be a purely technical purely technical analysis, or sorry, do you want to be a pure technical analyst, or do you want to take into account things like fundamentals, macroeconomics, things like that, or do you want to be an indicator-based trader? It's completely up to you. That's the thing. Trading isn't exactly just black and white. I mean, my charts are black and white, but trading in itself isn't exactly black and white, right? It's filled with infinite possibilities, and it's up to you to make sure that those probabilities are in your favor, right? Like, there's so many ways to trade. Like, literally, right? Like you could be waiting for a break and retest, and someone else that trades something else could be, oh, this is a fair value gap that we tag into, and then we're continuing lower. Or it could be someone like, oh, I also trade a supply and demand, so this is a supply zone. They're all just drawn a bit differently, but they all generally fall into like the same idea of just waiting for price to be hit, this area to be hit, and then for price to push lower or something like that, right? It all falls like around the same. There is no holy grail. There is no holy grail. Even if you are a good trader, you might go into periods of drawdowns for weeks, months, or even, I mean, years is kind of bad, but for months, maybe for quarters even, right? Like, I ended quarter 1 of 2025 being negative, but then I still managed to get payouts. I still managed to get funded. So it's really just like, it all depends on what you want to do with your trading. And there's no one to tell you that you can't do this, you can't do that, this is wrong, this is right. My strategy and my approach is the holy grail. None of that is the truth, because there is no truth. I don't care about uncovering the markets, right? I care about making money from the markets. That's why I'm staring at open, high, low, close candlesticks for endless days and endless nights. Not because I like how they look, even, but I just want to make money, right? So the first step to improving your technical analysis skill sets is to understand that there is no holy grail. Technical analysis is really in some way just a format of risk management. It gives you a good risk structure. It gives you ways to analyze the charts and data to know where to enter at, where to exit at, and things like that. That's all that technical analysis is. It's not some crazy holy grail. Oh, price came up here and then it pushed back down because it came into a supply zone. No, it's not. That's not the cause of why price went down. Prices happen to come down from that area of supply. That's it, right? So you have to find the concept that you like the most, and then train yourself to understand that approach to give you like a narrative or a bias, or if you don't need a bias, you need something else then, right? To give you that areas of high probability trades, all right? To give you conviction on why this area should hold. Say if I play it back, it came back up, and now it's trading above it. So this break and retest trade might look something like this. Like, you might have taken a short here or something. Something like, everything kind of works sometimes. That's what I'm trying to get at. Everything kind of works sometimes. Okay, and that's fine. Because you could still make money. Sometimes you just have to lose money less than what you actually make, right? That's pretty much the whole point of trading, is to enter and exit at favorable prices. That's it. Okay, so playing it off and it keeps going down. See how the trend from here, it continued going lower. If you were trying to catch the bottom, maybe you would have gone stopped out once, twice, maybe even 3 times at this point. Like took a loss here, took a loss here, like 2 times, not 3. But you get my point, right? The market moves in waves like this, right? So these areas of interest are going to be important for you to manage your risk. Okay, I won't lie, that one line really changed my trading. I stopped looking for the holy grail. I stopped looking for the next best thing because everything at some point in time looks like the next best thing, right? But when you play it out across years, you start to realize that the next best thing was only the best thing in 2025, and it wasn't the best thing in 2022, right? It wasn't the best thing 10 years ago, stuff like that. So, uh, yeah, you have to adapt. You have to adapt to the markets. And if one strategy that you've been testing out doesn't work for a few months, and then you feel like it's not really fitting what you expected, then if you're still new in your journey, you could hop, right? There's so much to learn, but understand that more knowledge doesn't mean better results. I know people that trade that, when they first started off, they traded EMAs and they moved over to just SNR, and then now all they trade is SNR, and then they've been with it for like 5 years now. So, yep. Yeah. So I think that's pretty much it. I hope you guys understood what I was trying to say, by just this like few price moves, right? Everything kind of works sometimes, no holy grail type stuff. But yeah, I don't know what else to make, like what videos to make. In a sense, I would like some recommendations on what you think I should be doing. Um, just put any ideas that you have in the comments or DM me on Instagram or my other social media channels, and we could probably get something going, right? But until then, I'll see you guys in the next one. Peace.